Welcome everyone. Thank you for joining us today. So, just to give you an introduction on what Market Talk is going to be, this is an exercise that we're going to do on a weekly basis. We're going to be discussing a lot of topics that are happening globally in the economy. What's happening globally? What's affecting our stock markets? What's affecting our investments? All of that we'll be covering here. And this is going to be an open-ended discussion with everyone. Uh, on a weekly basis. So, for the first one, the topic for this week is the plunge that the Meta as in Facebook, took. Right. So, I think we can start now without further ado. Let's just get right into the topic. Uh, you know, Last week, Meta as in Facebook, announced their quarterly results, and it has been a downhill slope for them ever since. So much so that the fall in market cap is now one of the largest single day drop in the history of the stock market, right? Not the kind of record you want to set exactly, but yeah. What were your thoughts when you saw that, right? When it happened last week, what were your thoughts, Sriram?
Karan, this is not the first time we're seeing a fall like this, especially when it comes to tech companies. It's a reality and expectation mismatch that happens. And especially when you have such a big metric, as a user growth or any other metric that affects these tech companies on a large scale, this this we have seen. And it's not quite surprising because, interestingly, if you look at Amazon, people might not notice this, but Amazon in dot-com bubble in 2000, it fell by nearly 90%. And look where Amazon is today. We revolve around Amazon. So it's just about the expectation reality mismatch that has happened, and it wasn't quite surprising. And also, another point is that we have seen this. We saw this even last week, in the last 2 weeks. Netflix, it's something that I think 50-40% of the population here uses, has fallen by nearly 50%. And this is because they're not able to maintain the user growth. Current.
Yes. I think you're quite correct in stating that this is quite the expectations. We have been seeing that in the Indian scenario as well with tech stocks that have listed recently. So that makes sense. That makes sense. Um, so now that it's been a week, right, since this has happened, we have actually identified quite a few reasons as to what led to this, huge fall in the stock price. 25% of net worth being lost for such a mega cap, right? For our audience, let's throw some light on what were the reasons that led to this fall.
Some of the reasons, current, that I've noted is that for the first time, right, since the time Facebook began, since the last 18 years, their users have been growing. In the users, it has been growing, but for the first time, it has contracted. And markets don't like this. Markets want something that keeps growing, and they're willing to give valuations for those companies. And secondly, when a CEO on the conference call, the CEO Mark Zuckerberg, he pointed out TikTok, the threat that TikTok is presenting to them. And when such a big player that commands most of our lives and who has a large market share is talking about the competitor, the markets do not appreciate this. And thirdly, the net profits were slightly down because they're investing in metaverse. Metaverse is still a concept that we cannot get our heads around. It's market thinks it's a gamble, and markets do not like uncertainty. Markets do not, and when uncertainty is there, what happens is that risk is high, and markets do not like this. So this
So
is
this is
one of the
one of
reasons
the
that I
reasons that
found
I
out
found out
for
for Yeah,
for
yeah.
this
For
type of
this type
correction.
of correction. I agree. That as well as with privacy laws catching up, as well as other companies, companies like Apple, on whom companies like Facebook rely, because at the end of the day, you are going to use a device to get onto that social media platform, and when the device sort of discourages you from getting onto the platform, it's going to be a big loss, right? So what I'm referring to here is the Apple privacy policy, right? So Apple recently updated their privacy policies, and now for every app you use on an iPhone or a MacBook or anything, right? The iOS or the Mac OS will ask you, Do you want to share? Do you want this app to actually track you outside of the application as well? And as per a latest database, right, 96% of the users have chosen not to do so, and that is a huge loss for companies like Facebook, whose whole business model relies on tracking their users and advertising them what they want when they want, right?
Absolutely,
Absolutely,
that's a great
that's a
point.
great point.
Because if you
Because
look
if you look
Facebook,
Facebook,
if they're
if
not
they're
able
not
to
able
go
to
through
go
the
through the
Apple
Apple
iOS,
iOS,
they lose a
they
large
lose a
chunk
large
of
chunk of
advertiser revenue.
advertiser revenue. Exactly.
And if
And
you
if you
compare, if you
compare,
have
if
an
you have
iPhone,
an
let's say you
iPhone,
have an
let's say you have
iPhone,
an
if you
iPhone,
go to
if you go to
Safari
Safari,
and if you
and
search
if you search
something,
something,
it shows you
it shows
Google
you Google
results.
results.
So
Yes. So
Google is
Google is
already
already
integrated with
integrated with
iOS.
iOS.
So if I'm
So
an
if I'm an
advertiser,
advertiser,
why should I
why
choose
should I choose
Facebook
Facebook
over
over
Google
Google
when
when
everyone's
everyone's
using
using
iPhones?
iPhones?
I'd rather
I'd rather
spend on
spend
Google
on Google
AdWords
AdWords
than Facebook
than
ads.
Facebook ads.
So this, I
So this,
think,
I
the
think, the
opportunity
opportunity
cost,
cost,
forecasted
forecasted
opportunity cost is
opportunity
somewhere
cost is
around
somewhere
$10
around
billion
$10 billion.
dollars. So
Yes,
this
I
is
think
what the
this is what
market
the
is
market is
discounting today,
discounting
Karan.
today, Karan. Right, right. And you know, although they're going through a tough phase right now, we have to sort of give it to them that they have become one of the most unprecedented social media platforms that we have seen. Right, for the last 18 years, they've been a dominant platform in terms of social media. Today, the amount of people that have access, or at least once in their lifetimes they have at least made an account on any of their platform, be it Instagram, Facebook, right, is large. I think before this Twitter spaces we were just discussing this, and Shriram, would you like to throw some light on this?
Yes, so even if TikTok comes up with new marketing techniques, they're able to take get in more users, maintain a good user growth. What we need to understand is that we use WhatsApp. No one can even think about not using WhatsApp. We need to communicate with friends, family. We need to
We
use
need to
Facebook
use Facebook
Messenger.
Messenger. Absolutely.
You can leave out the Instagram and all other tech platforms, but these two apps, messaging apps, it commands 50% of the global world population. So there are 3.3 billion people on these two platforms, WhatsApp and Messenger, current. And
And
if you look,
if you,
TikTok is a short 5 seconds, 20-second video creator. Not everyone's going to create videos, but everyone needs to text, everyone needs to message.
no, absolutely, absolutely, and Facebook is trying to monetize this side of the thing, this side of the, their messaging app and everything. They're trying to figure out how to monetize. They've partnered with it, large Indian companies like Reliance Jio for WhatsApp, right? So that's going to come. Something's going to come out of that as well. Um, at the same time, TikTok, although they've given them a run for their money, I think somewhere they even TikTok is lacking, right? Even though TikTok today is uh, the largest, right, by far the largest short form video content platform for the world, even after being banned in India. Um, they they lack in terms of this monetization, right? And like we discussed, these platforms, they thrive on the network effect. Uh, if if the network itself on the platform does not see how it benefits them, then I think that's where also that's a place where Facebook can sort of use their edge, because they have that monetization in place already.
Absolutely. Apps like TikTok, it'll still take time for them. And they have another revenue source that's left. If you go on WhatsApp, do you see any ads? I really don't think so. I've never seen an ad on WhatsApp, and they haven't started this yet. According to a study and research, it says that they're going to do WhatsApp. When you look at WhatsApp stories, which is becoming very popularized, they're going to show ads very soon. So, a lot of revenue segments still yet to open for them. And on another note, I just want to, we have a lot of audience. Thank you so much for joining in today, especially Friday evening, just before the weekend. Thank you so much. And if anyone wants to, ask something, discuss something, please let us know. We will open the floor to them as well, anytime, anytime. Yes, Karan.
Yes, correct. Yes, absolutely. Just raise your hand and we'll add you as a speaker, right? And then you can unmute and ask the questions. So continuing the conversation, metaverse, right? the company Facebook actually changed their name to Meta, right? When a large company like Facebook changes its name, changes its brand name actually for something else, they are going to bet big on it, right? But the problem we are seeing, I think, and the problem that market participants are also seeing is that the metaverse itself is not really, it's not something that we envision very clearly as at the moment, right? It's not something that's very clear. What will you do on it, what's going to happen there, and what's the use case for it, right? So I think somewhere, tell me if I'm wrong, but somewhere there's that uncertainty that is also leading to a plunge in valuations.
Yes, so current, like we spoke before this, markets like certainty. Markets like good cash flows, good profits, they like dividends, they like share price going up, and that's what they will value. The more uncertainty you have, whether it's with a new project or whether it's a new chemical plant, anything, if it is uncertainty, there's risk. And
And
when that risk factor comes in, the valuations drop. More risk, the lower the valuation. That's what happens. Yes, and look,
absolutely.
and this is not the trend. The trend, there's a trend always. If you look, we can't say that metaverse will be a success or a failure yet, because LCD TVs. Let's just step back around 20 years. LCD TVs. It wasn't in every home, but now we see it in every home. We never thought it would happen. Now iPhones, similar to that, iPhones. We never thought everyone in India could afford it. I mean, at least 25% of the population could afford it. But now, if you look in the urban cities, 25% to 20% of the population is on an iPhone. Now, why can't
Why?
that be with the metaverse in the next 20 years? But a lot of uncertainty, and uncertainty, markets do not like uncertainty. Current.
Correct. Absolutely, I think that is the case, and this is similar for all technology adoption, right? Um, we are too early for metaverse right now. Let's see where it pans out in the next 10 years. And you mentioned putting down a plan for chemical companies and all, and that brings me to another part of this conversation that we're having today, which is how should we look at technology companies? As far as I understand, um, technology companies do not operate like a typical manufacturing company, right? They won't have their KPIs won't be similar to a, let's say, a steel manufacturer, right? So what should an investor look for? What are the key performance indicators? What should you look for while analyzing these businesses? What kind of fundamentals are we looking at?
So, current, like you rightly put it, you can't look at a tech company like how you would take a shrimp exporting company or a manufacturing company or a pharma company, because in Meta or Paytm or the tech companies, there's a lot of intangibles floating around. And the KPIs, what people should be looking for is, are they able to grow? Are they able to capture the market share in terms of user growth? For example, for Tesla, it was how many units of cars they sold. So that you, that makes sense if they are able to get in a large population of car drivers or vehicle users. And we've seen this in the past that Tesla stock price do not essentially react to the net profit, the bottom line, but it reacts more to the vehicle numbers that they're able to sell year on year or quarter on quarter. And another KPI, look, when if you take a tech company or a manufacturing company, let's say they're doing a capex, okay, they're setting up a new plant. This will not come with the net profit. This will be considered as investing cash flows, and this does not take place in the income statement. But if it's a tech company, all the expenses that they're doing, it's directly accounted in the P&L, meaning the income statement. So the profits are shown lower, and markets do not like that. Markets like profit, cash flows, like we spoke earlier. So the KPIs to look for is user growth. Are they able to capture the population, a large chunk of the population, and are they able to grow that without any contractions?
Right. I think a lot of tech companies also sort of follow the freemium business model, wherein you hook your client, give them something for free, you get a large number of people to do that, and then you start the monetization. And for that key reason, looking at the number of people they're able to capture quarter on quarter is very important, right? At the same time, even in the Indian scenario, in the last 1 year, we have seen n number of IPOs, right? Lots of them were really successful. Some of them were not so much, right? Out of those, few of the larger ones were from companies which are, you know, new age tech companies like Zomato, companies like Paytm, Nykaa, right? MobiKwik, and there are a lot of them, right? Um, and retail investors specifically had a lot of interest in investing in companies that they are very closely, looking. They're very closely sort of looking at them grow, right? Looking at them using their products on a daily basis, right? But at the same time, from an investor's point of view, that's not exactly what you should look at, right? So what would your advice be to someone who's looking to invest in an Indian tech company today?
Again, Karan, are they able to capture a population? Like you said, freemium. Why did they do this? When Facebook offered their products to us, we thought it's free. And we used it all day, and even Netflix is coming with 200 rupees worth of subscription. Do you really think they're going to keep it at 200 or 300 or 500 rupees? No. Their cost of acquisition, just to give our listeners an interesting fact, is that their cost of acquisition of one single customer, is nearly $1,100. But in India, they're charging 300 rupees. I think if you use your phone, they're charging 300 rupees. Do you think that's sustainable? Definitely not. What they will do is they're trying to capture a large chunk of the population, then they will make us pay eventually. So these are the metrics that we look at, whether they're able to capture a population, and are they able to grow revenues, and is net profits coming down, meaning net profits, meaning the loss is the loss contracting, and will they become a profitable company soon? If you look at Tesla, since we talk about a lot about the US today, if you look at Tesla eventually trimmed the losses. They had nearly 10 billion, $10.5 billion losses at one point. Then they started trimming it, and the market gave them valuations. But if you look at something like Paytm, last year at this time in Q3, they reported 500 cr of losses, but this time it's 700 cr. So that's what you're seeing.
Right.
Markets are not valuing these companies. Divam, would you like to add on this point? I think, Karan, we can go to the next section.
Yes, I think Devam is connecting. Just let's just wait for 1 sec. Okay, okay, all right. Yeah, so I mean that was the question, right? And even like these tech companies, it's not really clear right now. What are they going to do, right? Some of them have very strong and focused business plans, but for some others, that's not the case. They're doing acquisition left, right, and center, and uh, what is going to be their key competency going 5 years down the line? That's not clear. And I think once again, the markets don't know what to value them on today, right? You will value them on something that's going to be their key competency 5 years down the line, and that's not clear today.
I think this is a interesting point that you brought up. Look, because take Paytm for example. Paytm, what is its core competency? Sure, it's digital payments, but there's a lot of competitors again. They explored the space. They got the first mover, but then a lot of competitors came in. Google Pay, Bharat Pay, RuPay, and even Amazon Pay these days. They're coming in now, and they're switching to new platforms. Meaning, you can even pay your gas bill now on Paytm. You can trade stocks on Paytm using Paytm money. So market still is trying to figure out what is their core competency. Is Zomato a food delivery company, or is it a tech company? Markets don't know this, and when they get clarity on these aspects, valuations will be given.
Or is Zomato a content company at this point? Yeah, but I get your point. So with this, I think I would like to open the floor for questions. Listeners, if you would like to ask us anything, right, and that could range from topics that we just discussed, or even our small cases or green portfolio in general. If you want to know something about us, right, we'd be open to all kinds of questions. So if you want to speak, just send a request for becoming a speaker, and we'll make sure that happens.
So I don't think we have many questions today. So everyone, thank you so much for joining. The entire, the concept behind doing this is that we share our research and whatever is happening in the world, that in the economy that's affecting us or that's happening in the stock market, we bring it to you in a very very consumable format. So we plan to do this every week. And if there's anything that you learned, I'm sure we spoke about a lot of data points, a lot of perspectives. If there's anything that you found useful, please share it with your friends, family, and please give us a retweet so that we get more people into the community.
Right, right, absolutely. Uh, with this, I think we'll close. And thank you everyone once again for joining us today. We'll keep these sessions very short and crisp going forward, and we'll try to come every week with you. And looking forward to a conversation again, Shriram. Thank you once again. Thank you everyone.
Thank you once again. Thank you, everyone. If you have any topic that you would want us to discuss, even with you, let us know and let us send us a tweet, and we will definitely address it, and we'll take that topic for next week. Thank you so much. Thank you, everyone. Thanks.